It started with just one announcement, but it hit Dalal Street like a thunderbolt. April 7th, 2025, a day Indian investors won't forget anytime soon. Markets crashed, portfolios bled. Rupees 29 lakh crore in investor wealth wiped out in just a few days. Welcome to what many are now calling India's Black Monday. So what caused all this chaos? The trigger was a move made 9,000 miles away by US President Donald Trump. On April 2nd, Trump announced a 26% tariff on Indian imports as part of his new Liberation Day economic plan. He said the goal was to reduce America's trade deficit and protect domestic jobs. But this announcement sent shockwaves through global markets, and India felt it the worst. These weren't just tariffs on India. Trump's plan hit China with 34%, Japan with 25%, and the European Union with 20%. But India, with many key export sectors like steel, auto parts, and IT services, was among the hardest hit, and panic quickly spread through the stock markets. On April 7th, as the markets opened, the Sensex crashed by 5% within minutes. Small and mid-cap stocks took an even bigger beating, with some plunging 8 to 10%. Tata Steel tumbled by 10%. JSW Steel fell by 9%. Tata Motors dropped nearly 8%. These companies heavily rely on exports to the US, and the higher tariffs made their products less competitive globally. The IT sector also took a hit. Infosys lost 7%. Tech Mahindra dropped 6.4%. There are now real fears of outsourcing contracts being pulled or delayed. Even the banking and finance sector felt the heat. HDFC Bank and ICICI Bank fell as worries grew over loan defaults from struggling exporters. But why did the markets react so sharply? Because the US is India's biggest export destination. Every year, India sends goods and services worth over $90 billion to America. Now with a 26% tariff slapped on that, those goods become far more expensive for US buyers. That means Indian companies risk losing clients, contracts, and money. And when profits fall, stock prices drop. It's as simple as that. What does this mean for you? If you invest in mutual funds, SIPs, or the stock market, you're already seeing losses. Beyond that, it could mean job losses in sectors like IT and manufacturing. It could also mean India's economy slows down. Analysts are already warning that if these tariffs stay in place for more than 6 months, India's GDP growth may fall by 1 to 1.5%. Could this situation have been avoided? Maybe. Trump had been openly talking about bringing jobs back and correcting trade imbalances during his campaign. But the sudden scale of this move and the absence of any talks with India has shocked even seasoned observers. Some experts believe this is more about politics than economics. And now the big question: what happens next? The first possibility is that both countries talk it out behind the scenes and try to ease the tension. That would be the best outcome, but there is no sign of it yet. Another possibility is India hits back with its own tariffs, but that's unlikely with India's current diplomatic approach. A third route could be India challenging the tariffs at the World Trade Organization (WTO), but legal processes take months or even years. There's also talk of India pushing to diversify its exports to regions like Europe, Southeast Asia, and Africa, so we don't stay overly dependent on the US. One thing is clear: this crash has been a wake-up call. In a connected world, no economy operates in isolation. When major countries change policy, the ripple effects are instant and massive. As for now, the markets remain tense. Exporters are worried, investors are nervous, and until this trade storm settles down, uncertainty will rule markets.